Dear ladies and gentlemen, my name is Markus Niin and I'm the president of ELSA Estonia, and I'm extremely honored to have this first word. I don't know whether you have experienced it, but I definitely have. Whenever I say to anyone that I'm interested in private law, for example, people usually look at me with faces as if I'm going to be the next rich mug with an expensive watch, scent or a perfume that goes miles away. Little do they know, however, that private law and M&A in particular can be also a source of personal interest. Little do they know, however, that private law and M&A have an important role in the economic development and also efficiency in a society. So if you have found yourself thinking the same thought as I have, do not think that you are somehow less deserving of honor and respect than other lawyers practicing in fields such as state law or human rights law. Become better, educate yourself, become a professional, because among the hundreds of law degrees that are out there, only few people who have them can claim themselves as being truly professional. And professionals are the people who are completely and constantly required. And becoming better is what this conference is about. Now, we all have been to conferences before, right? Some of us more and some of us less. Usually, when I fly back home, I quite often find myself thinking that, well, I got something, but compared to the amount of money I just paid, I could have read a couple of articles and that would have been suffice. Now, we have tried to avoid that. And in order to do that, we have constructed an academic program in close cooperation with the best practicing lawyers in the field. People who have also educated themselves abroad as well, in universities such as Oxford, for example. So become better and smarter, and use this conference in order to reach closer to your goals. But not only. Look around you. The people who are over here are law fanatics. Those are the people who in 10 years or less will be quite successful. So get acquainted and make friends. We do know, everybody probably knows that, the age-old adage, according to which the youth of today have failed. This event, this conference, was organized quite exclusively by the youth. Do you know how much time and effort was put into it in order to make this conference actually and genuinely happen? 8 months, and almost every day comprised of work in relation to the conference. So honestly, if anybody were to tell me that the youth of today have failed, I, quite frankly, disagree. The next person up is Märtot, who is the Director General of the Estonian Competition Authority, followed by Karl Badem, who is the representative of the international law firm PricewaterhouseCoopers. Thank you.
Dear guests, dear students, for me it's a very good pleasure to open this international seminar today, which is called Cross-Border Mergers and Acquisitions. And I'm very glad that your organization has decided to organize this event in Estonia and in our beautiful capital, Tallinn. By the way, our capital is a very nice city. It's from the medieval times, and I hope very much that you will have some more time also to spend in our beautiful city. But what I would like to mention you is that you have selected a very good place for organizing such a seminar on the competition issues. Because what's typically for Estonia is that we are a country with high ranking of economic freedom. And by the way, by the economic ranking of last year, Estonia got the 8th place in world competition, and that's a very good sign. And by the way, we have the highest ranking of economic freedom in European Union, which means that that's good that you have decided to be in Tallinn, to be in Estonia, and you speak here about competition issues. It's clear that the democracy and liberal economic approach has given the best results in economic development, and of course Estonia is a very good example. We got our independence approximately 25 years ago, but as you see, today we have so high ranking in any tables in the world competition, so this is a very good sign for us. And once more, I would like to underline that the competition policy has been always an important political tool for economic development and for establishing of precondition for the free market economy. During your seminar, during these days, you are going to have very important and interesting topics about the merger control, which is again an important part of each of the competition authority. And we as a competition authority, we have had also very interesting cases concerning merger control. But in order to conclude my opening words, I would like to wish you a pleasant stay in Tallinn, very interesting discussions, very good studies, very good lessons to learn, and of course you are always welcome to come back to Estonia. Thank you very much.
So now it's time for our first lecture today. Hope you're all very, very excited, and please, Karl, come and talk a bit about the anatomy of M&A.
Can you turn that on? Thank you. Good afternoon. Hey, my name is Karl, or Karl Bodem. I'm the managing partner for PricewaterhouseCoopers Legal in the Baltics. I'm an M&A lawyer. I've done M&A all my professional career, and I really love deals. I really love transactions. So what you spoke about there, you know, I'm the guy with the suit and the perfume. I don't know if you smelled that, but it's all about the love for your job. And lawyers are so different throughout, you know, different kinds of disciplines. So I really love M&A. Okay, and I'm going to talk to you a little bit about what M&A is all about. I know that you're from different years in school, you're with different backgrounds, different cultures. So this is very basic stuff. Please, you know, don't hesitate to interrupt me at any time. Interact all you can. Ask whatever questions. Let's not make it so much a lecture rather than an interactive sort of thing. Okay. So I'm going to tell you a little bit about where I'm from and what we do. So I started PwC Legal in Estonia 3 years ago. We're the only international law firm here. None of the big firms like Cameron McKenna, who's going to be here tomorrow or the day after, they're not in Estonia. So we're the only global law firm in Estonia. We're a network of 2,500 lawyers and in 87 countries. So by geography, we're the largest law firm in the entire world. We do about $500 million in revenue. That makes us about a top 10 law firm in the world. And we're about 300 lawyers in the Central and Eastern European region. So this spans from the Czech Republic up to Russia, and I'm a partner in that partnership. We're also the fastest growing law firm in Estonia. So I'm sort of patting myself on the back here, but I started this up 3 years ago, and we've been the fastest growing by revenue in Estonia ever. So kudos to me. Anyways, but enough of that. This is where we're at. The big sort of darker spots are where we're not in right now, and these are slowly going away, so we're conquering the world. But let's talk about M&A. If you go to school and you learn about law, you would, if you're from a continental European country, you would learn about the law of obligations, commercial law, business law, objects law, that sort of stuff. If you're from a common law jurisdiction, you would learn about something a little different, torts and whatnot. And now, if you go to work for a law firm, then you discover that all of a sudden, the stuff that you do is not really related to one subject at school or the other subject, but it's very interdisciplinary. So you have to know different sorts of things in order to understand, you know, how to advise your clients. And what law firms usually do is we divide those disciplines between practice areas. So most law firms advise on M&A, on corporate law. They advise on real estate law. Or then alternatively, they would advise on economic sectors like IT, for example, or telecoms, or energy, or that sort of stuff. And in order to advise, for example, on M&A, you need to know about different types of law. You need to know about litigation, you need to know about process, you need to know about law of obligations or whatnot. But M&A, essentially, if you see it, that's one of the definitions. So a transaction between non-related parties. So I've been watching Bloomberg News every morning for the last, 10 years. And they talk a lot about transactions. And a transaction in the legal realm is basically one company or one group of shareholders acquiring another. So it's pretty simple stuff. I'm sure you've all heard about that. Most of you, I'm sure, already know a lot about that. So M&A, from a technical perspective, is not a merger from a commercial law perspective. Like if you merge within a group, that's not M&A. Or if you do an IPO, that's not an M&A. If you go public, that's not an M&A, and etc. Now, the M&A essentially is, before we go to that next slide, M&A is not only about law. M&A is mostly about business. And M&A, why I really, really love that part of law is that it's really related to the business side of stuff. But actually, to tell you the truth, lawyers are not the biggest part of M&A. They're a sidekick. It's like, if a banker is Batman, we're the Robin, okay? No? Not funny? Okay, fair enough. Let's go forward. So, why do M&A? Most companies need to expand, okay? If a company stands still, that means it's actually going backwards. So you need the energy and you need the, even the excitement, but you need the growth to fuel your future for any company. So if you look at stock-listed companies, for example, every quarter the shareholders want to see results. They want to see something happen. They want to see the numbers go up. They want to see the green all the time, not the red, okay? Always to the north, never to the south. So in order to do that, you can't always, if you've already conquered so much of territory, for example, you have an office, whatever your firm is, you have an office in every single country in Europe, okay? So you can't expand really by opening up new offices. So what you do is you try and acquire new business. So this is the reason why M&A happens. You need to either expand your business in those existing markets, also expand to new markets, or you need quicker growth in your existing markets. So these are just a few examples, okay? You acquire new technology or know-how. Let's say, for example, that you're an IT company who builds whatever, software for gaming, okay? And then all of a sudden you discover that you need to do an additional service for your gaming clients. Let's say that they need some gambling-related advice, and there's a company who does very specific specialty gambling sort of technology. So you acquire that, you integrate that into your own business, and so you expand your own business by acquiring this company, getting out those synergies, and then building that on top, okay? Now, investments is also a very, very fair bit of M&A. If you look at funds, for example, there are a lot of funds. Estonia has a lot of funds. Europe has a lot of funds. Lords is a big fund in the UK, for example, big private equity company. East Capital in Sweden, also operating in the Baltics, is a big fund, okay? So they manage other people's money. And they need to, in order to make more money for those people, they need to acquire new targets. So let's say that East Capital, for example, who's my client, they manage 5.3 billion euros. Okay, that's a lot of money for most of us, I guess. They would raise some money. They would get money from their investors, saying, "Okay, here's 100 million, invest it, and I want 110 back." So in order to do that, they would go out and find new targets. Like we did a deal for them a couple months ago. They bought an office building in central Tallinn for 22 million euros. So the point of that is they get out there, they buy the building, they get the revenues from the rent, and then they would sell it at a profit sometime in the future, hoping that the prices will rise and they'll get the efficiencies out of that project. So actually creating value for either their shareholders or for their investors. So this is the investment part. Now, investor exits is related to that and focusing on principal business sectors anyway. So, so these are just a few examples. I'm sort of trying to give you an overview, but as you hear, this is very, very economic, okay? So the background of all this is very economic. It's not so much legal. The truth of the matter is that 80% of M&A fails, okay? So failure doesn't mean that it falls to pieces or to shambles immediately, but it means that they don't reach all their goals, okay? So M&A is really difficult. When we go through an M&A process, let's look at it from the legal point of view. There is no M&A law, really. Most countries have some merger-related norms. They have statutes. They have some best practices, but there is no real M&A law anywhere, not that I know of. And M&A usually means that there are some standards which are followed in order to do this process. So M&A is it's the most international sort of, the most international type of law there is, okay? If you're a litigator, for example, if you go to court, if you defend your clients in court, then it's really difficult to use that skill set of yours. And to go, for example, if I'm Estonian law educated, it's very difficult for me to go to court in the UK because I wouldn't know the first thing about the process. I don't know the laws. So even though I might be able to come up with a good argument, I can't really put my knowledge into use. So you can't transport your knowledge from one country to another. That's the sad part about being a lawyer. If you're an M&A lawyer, then M&A, without having specific sort of roots in one specific culture, you can't actually export that and work across different jurisdictions. You obviously need experts who know the material laws of every country, but the standards are pretty much the same. So if I, for example, have done, I don't know, 50, 70, 80 deals in Estonia and the Baltics in Europe, then it's pretty easy for me to go over, let's say, to France and do a deal there because the schedule or the process of how it works is exactly the same if you look at it from a very, very sort of institutional and professional perspective. So I'm talking about sort of big law firm, big M&A, big transactions that are very standardized. Otherwise, well, any transaction where one company would acquire another would be called M&A, but they don't specifically have to follow any of those standards, and we're going to talk about that in a second. So, as I said, it's the most interdisciplinary area of law. So that means when you start acquiring a company, let's take an example. A big telecom acquires a small mobile operator, okay? And in order to verify what the risks are within that company that they're about to acquire, they need to understand what their assets are, okay? What kind of real estate do they have? What kind of contracts do they have? What liabilities do they have? What kind of litigation do they have going on? What's the intellectual property that they have in there? I mean, I don't know if you've ever read the eBay failure, how eBay was sold from one to another, actually without selling the IP, and the initial investors got a lot of the money back, and you know, eBay was screwed because, anyway, there was a big faux pas. That was because of bad lawyering, really, truthfully. So you need to know all sorts of law. And these laws would be, of course, related to that specific country. So if, let's say, in a cross-border M&A deal, let's say a Finnish company comes in and acquires an Estonian company, they need an M&A lawyer who can run the process, and different lawyers, different Estonian lawyers, to tell you basically what are the risks and what are the liabilities and what are the advantages, etc., in relation to that Estonian target. And then they would need to know Estonian laws. So from a cultural and linguistic point of view, an M&A process is very different. it's a lot about negotiation. I've done a deal in China once, which is, I mean, very different. We started up our law firm in China about a year ago, and you know, most of you, I guess, I assume are from Europe. Stuff in Europe is done pretty much in a similar way. I was in China. I was the head negotiator for my client, and we go to this meeting, and we were trying to acquire this other company, and the president of this other company sits sort of, you know, across from the table, and is like, "What the hell is this guy doing here?" And I'm like, "Excuse me?" Like, he's nobody. I'm like, you know, I'm representing my client. "Yes, but you're not the client. What the hell are you? I mean, you're a consultant. Who cares about you?" And I'm like, "Excuse me?" I understand, but with all due respect, I mean, my client can't really advise on M&A because he's a business person. Like, yeah, but I'm not going to talk to a lawyer. Get the fuck out of here. Excuse my French. So this is something that would happen, for example, in China. That's very different because of the cultural difference, okay? They would see lawyers as really a nobody, just a sidekick, like a person who's in that process, helping out, but not, it's not, sort of, I think it's a matter of respect or something, and a matter of culture. So M&A, especially if it goes across border, you need to be very mindful of how that works. And as an advisor, you need to work with, with your lawyers and with your client in order to better sort of facilitate the process. Again, a very sort of bird's eye overview. And efficient project management. So M&A is a lot about project management. Again, talking from a legal perspective, there's a whole process that starts going with the due diligence and everything. We're going to go there in a second. And you need to really, you know, you need to ride the deal. That's how lawyers talk about it. You need to ride the deal. You need to be like a bulldog. You sort of, you know, take that little thing and just, you know, hammer your teeth into it and ride it until it's done. As soon as you drop it, as soon as you drop the buck, basically you're done. So project management, efficiency, being a bulldog, those are the words that describe M&A. So from a negotiation point of view and from a characteristic point of view, litigators and M&A lawyers are not all that different. So if you've ever seen the series Suits, I'm sure some of you have seen Suits. So Harvey Specter does sort of M&A and litigation at the same time. It doesn't really happen in the real world, but it could, theoretically. Okay. So the M&A process. We're only talking about the M&A process from a legal perspective, okay? So we're not talking about the investment banking, we're not talking about financial advice, we're not talking about tax advice, and etc. So essentially, these 7 points are the very basic standard of M&A, being either cross-border or within borders of one specific jurisdiction. So in a company, you usually do, or you might do, a vendor's due diligence. A vendor is someone who sells, and an acquirer is someone who acquires, obviously. So a vendor's due diligence is like an audit. It's a legal audit of a company. So you audit yourself, and you try and find your weaknesses, your risks, and you try and define your own company before you sell it. This way, you will be able to assess what the price of your company is going to be, essentially, and whether you're going to be a good match for anyone that tries to acquire you. You might do this, you might not do that. So this is like the starting point. M&A, as you would see it, is a lot about being transparent. It's a lot about being objective. It's not so much about trying to hide your liabilities or the risks involved, because if you have good lawyers, then usually the transaction agreements and the transaction documents would cover you from any sort of fraud within that system. So you would want to be pretty transparent. Then usually you would start up the process by signing a non-disclosure agreement with either different parties if it's an auction process, or with one party if it's one specific target that you're thinking about. And And this is also, I mean, this is, there's so many issues to talk about. I'm trying to give you like a glance view, okay? A sale process might be a direct sale, meaning that you decide to sell to one specific party, or in some circumstances you might want to do an auction. Just like any other auction, you would hire most likely an investment bank or a financial advisor or a law firm sometimes to carry out this auction. So what you want to do is you want to get the best price for your asset. Sometimes it is not possible for non-disclosure reasons, it's not possible from a competition perspective, or your company might be suited for just one specific buyer, okay? So, but as you might imagine, if you have only one buyer, then you have to think about, you know, your leverage, what your leverage is. So every time you do M&A, it's all about leverage, and leverage is about the terms of the agreement and the price, and well, it's all about money essentially. But it's always better to do an auction if at all possible. Then when the non-disclosure agreements and the letter of intent, if you don't know what those are, just, you know, raise your hand, I'll explain. There are no stupid questions, only stupid people. I'm just kidding. Ask whatever you want. If that's signed, then you do due diligence. Okay, and due diligence, again, is essentially an audit. An audit, then the buyer would come in and audit that company and try and find out what the risks are. So the legal due diligence focuses mainly on risks. Okay, what is the risk? What's the risk, and what's the impact of that risk to the buyer? So if I want to buy that telecom or that small operator, I want to know if he has created some sort of, I mean, if he has a litigation. Let's say the price of the company is 1 million euros, okay, for the sake of the argument. And it turns out that they actually have an ongoing dispute or a litigation in the court of law where they might lose. And if they lose, then they have to pay like 1 million in a penalty or something. So that would reduce my value of the company to 0. So that's what you want to find out during a legal due diligence. I'll talk about the other abbreviations later. So you carry out the due diligence and you produce a report on those findings. We call them findings. And then you move on to negotiating. And negotiations, again, are all about the price, but they're all about the terms and the structure of the transaction, that M&A transaction that you're about to do. So usually negotiations are pretty tough. Lawyers are notoriously difficult with each other and with themselves and with their clients. So everything's really difficult, but it's a lot of fun. And so when you finally come up through those negotiations, which sometimes might last for a year, then you sign an agreement, and that agreement would be called usually a share purchase agreement, unless you're buying an asset, whereby this would be an asset purchase agreement. I'll give you an example. So the example that I brought before, the 22 million we bought, the Metro Plaza we bought for East Capital, that was an asset deal, which means that we bought an asset. We bought real estate. We bought a house. Okay, we bought a house with agreements, and that was the asset. So there was no share. Sometimes, or actually more often, you would buy a share. So a share is a share in whichever company. Usually this would be a limited company, and then you buy the shares. So so it's a different situation in each country, but these things would be regulated differently. Competition clearance is something that's going to go down after the signing takes place. Usually, depending on the size of the deal and the market, you would have to either notify the competition authority or you would have to get clearance. That depends on the jurisdiction, depends on the law. In Estonia, if it's up to a certain deal size, you just have to notify the competition authorities. If they don't do anything within a month, then you're clear. If you're in a dominant position, usually in most European countries, this would be a 40% threshold in a specific market. You would have to get clearance from the competition board. So that's merger control. And my good colleague, Tanel Kalaus, is going to talk about that. Which day? Tomorrow? Tomorrow. Tomorrow. So Tana is coming tomorrow to talk to you about that in very specific detail. And then basically, if competition clearance or merger control is done, then you move on to the technical preparations for closing. You need to do certain takeover issues. You need to change management. You need to make sure that your bank accounts are there, that you have all the access to that new target that you acquired, etc. And then finally you close. Okay, so Harvey Specter talks a lot about closing. Closing is a very big term in law. Specifically in M&A, it usually means the very final end of an M&A transaction. This is where you're done. This is where you own it. This is where you've basically reached the end of the deal. So that's
One question.
Shoot.
In practice, what does closing mean? Is like signing a document then, or?
No, signing is here. So you sign first, and then usually you would have certain issues that need to be finalized before closing. So let's say that you've agreed on all the terms. I mean, I'll pay you 1 million. I'll pay you in 3 tranches, one after 3 months and whatever, and you will have to produce evidence that you have acquired, let's say, a certain amount of intellectual property, IP, that you have kept all your employees that I want to have on board, and then you will fire this one guy that I don't like. You will take care of all that, and the competition board in 30 days is going to say that we're all clear for merger, and this is when you sort of transfer the money. That's when you transfer the shares, and that's when you close. So usually a signing and a closing take place at a different time and space. Not always, but most often. If it's a big deal, then at least it requires competition clearance. So you can't if you do it without the competition board's approval, then you risk the transaction potentially being void. So you can't sort of pay the money and get the asset at the same day. So that's why you sign first, you agree on everything, it's binding, fully binding, and then you close, which means that you do the sort of technical swap of money and asset afterwards. Yeah, due diligence. Okay, so I've listed different sorts of due diligence. Another one of my colleagues is going to talk about that in detail, but I'm going to talk to you about due diligence within a larger framework. So we're talking about cross-border M&A. So it's not only legal due diligence, that's just one small part of it. Usually a due diligence that you have to understand as a lawyer, not advise on, but have to understand, is there's tax due diligence, which is TDD. There's TC, which is technical due diligence. There's SYDD, which is, I don't remember what it was. Commercial due diligence, which is C. Operational due diligence, which is ODD. And in the center, finance or financial due diligence. So, so basically, these things, all those due diligence processes, look at the targets. Okay, the term is target. Look at the target from different perspectives. So imagine that you are you're buying. Let's take another example that we did some time ago. We advised the client on the acquisition of a 25% shareholding in an Estonian, it's not really a startup, but an internet advertising aggregator called AdCash. So they were valued at 80 million euros, which is kind of huge for Estonia. And my client acquired 25% of them. So in order to make that acquisition, in order to buy into that company, they have to understand, again, what the risks are. So they want to look at it from a technical perspective. So an IT expert would come in and analyze their systems, analyze their IP, analyze how they do their things, what their processes are, etc. An operational due diligence person would take a look at the organization, so how the management runs the structure. If the company's fast growing, for example, they would have to understand how, how they take decisions, how they recruit, what kind of people do they recruit, what are the rules for that. A tax due diligence professional would look at the tax risks within that company. Have they paid all their taxes? How they have done that? Do they have any risks there? Would they be obligated to pay, I don't know, X million in tax sometime in the future for mistakes that they have made in the past? So tax and legal are sort of integrated. Tax is sort of part of legal, but it's a part of accounting as well. So it's, again, an interdisciplinary thing. Most tax experts would be either lawyers or finance people, so either or. Commercial due diligence would look at the commercial side of things, and a financial due diligence person would actually, finance is not so much about, it's not so much about assessing risk, the impact of that risk. Finance is looking forward. Usually it's an EBITDA or EBIT calculation. So you want to look at the valuation of the company, how much profit they make, what are the multiples within that financial situation. And so in the event that a client acquires a target, let's say 5 years running, what would be the financial situation? What's the potential of that company and what the finances are? So there's a big team on the acquisition side and a big team on the vendor side, and both have to work together in order to make sure that the process, that the information goes out and comes in. And obviously within this process, let's say that an M&A deal does not happen. You would have given out the essential information about your company. You've given out most of your business secrets. Especially if it's a competitor. And very often a competitor would acquire another competitor, if it's smaller, sometimes bigger. So these are the difficult situations that we as lawyers have to manage for our clients. You have to think about what happens if the deal doesn't go through? How do you handle that situation? How do you make sure that your competitor is not going to go out there and use that information against you? Or alternatively, let's say a shareholder comes out and sells his company, and another company buys it, but you just start a new company. You get all the people on board from your previous company, you've sold it for millions, and you just restart because you have all the know-how. You just you restart, start again, and then basically the other one's in a very bad shape. So these are the things that from a legal perspective you as advisors are going to have to work on. So it's a lot about collecting information, building trust. This is what I talked about before. It's the sort of transparent part of M&A. And then obviously you prepare for integration. Integration is a very, very, very difficult business part of M&A, where you basically make sure that what you have bought actually fits into your structure or will make that money that you want it to make. And this is why you do the due diligence, the different sorts of due diligence. Not every target is equally complicated. If you buy a small shop somewhere in the countryside, that's also M&A, but you wouldn't have to do all those things because your advisors would probably cost 100 times more than the actual acquisition value. But if it's a big deal, then it's a big deal, okay? So you have to get all those advisors on board. So assessing real value, we talked about that. And obviously, it's always, the due diligence is always a tool for price negotiations. So more often than not, I mean, I don't know of any other example, but a buyer always wants to pay less and a seller always wants to get more. So you as lawyers will take all that information in when the finance guys and the tax guys and all those other guys have identified those risks, have calculated the valuations and the potential value of the company, then you go in and you try and negotiate the price. And there are different ways of negotiating the price. Obviously, there's also, I mean, it doesn't always mean, price negotiation doesn't always mean the end sum. The end sum can be $1 million, but if for your client, it would be beneficial, for example, to structure the deal so that you pay the 1 million in tranches of 100,000 in 10 times, it might be just as good as basically getting it for free because, well, you can earn the money from the target. So there are various aspects of negotiations and price, but what I'm trying to say is you have to understand the economics behind the deal and why those clients make those deals. Yeah, if you talk about the process of due diligence, then this is basically true for every single type of due diligence. You gather information publicly and from the target. Most often, like I explained before, the target or the seller would volunteer this information. So they would have to say, if I'm selling a company and if I have a big litigation going on or a big tax risk, I would have to go out and say, hey guys, I have this risk here, take this into account. If I don't say this, then the transaction documents will most likely say that I have deliberately held back the information and I would have to be liable for that information later on, and I have to pay a penalty or make sure that I pay the damages. So as a lawyer, you trust a lot. You trust your counterpart a lot on providing that information. I mean, you don't trust, but you get that information from them. That's your source. There's only so much you can get publicly, depending on countries. In Estonia, you can get quite a lot publicly. In Russia, for example, you can't get anything publicly. Management interview is a very, very important part. The tax advisors, the finance advisors, and the legal advisors would all take part of this process part, which is called a management interview. This is, in common law, it's almost like a deposition. I don't know if you know what a deposition is, but it's a process where you basically, can ask different sorts of questions from your other party, and they would have to answer in the best way that they can. So you try and sort of crisscross and sometimes be a little smart, be sleek, be good in crisscrossing your opponent in all those different questions in order to try and find out what the risks are and what the potential is. But this is also, as a lawyer, it's also important for you to understand the business, because as an M&A lawyer, unless you're in a very, very, very large jurisdiction like, like for example the UK or the States, you would have to know different sorts of fields. So in Estonia, for example, or in the Baltics, I wouldn't be able to focus just on, let's say, IT or let's say on IT M&A. I couldn't just do like IT tech M&A. I would have to do real estate M&A, energy M&A, IT M&A, different sorts of M&A. So in order to understand how those companies work, a management interview is a good place to get a good picture of that. On-site inspection, this is usually done mostly not by lawyers, but sometimes by lawyers. So you would have something called a data room. I don't know if you've heard about data rooms, but data room is something where you gather all that information. The data room can be a physical data room, or it can be a data room within the cyberspace. And this would then hold all the information that's relevant with regard to the target. So the finance information, the tax information, the technical information, the legal information, and then all the experts would go in and analyze that data and try to understand what the risks are. So later, when you've reviewed all those documents, let's say you've reviewed the employment contracts, the rent contracts, you've reviewed the finance contracts, leases, whatever, and if it turns out that you have missed something, that you have missed to identify a risk, then you as a lawyer will be liable, or you as a tax advisor will be liable for not reporting that to the client because they were not able to use that in the price negotiations. So that's something that you have to be mindful of. Yeah, and serious risks are difficult to discover. No surprise there. Anyway, but that's a sort of very basic due diligence process. Obviously, if the bigger the deal and the bigger the law firm, the more processes there are. So if we go into a very big deal, we have very specific sort of in-house or house-style rules of how we go about this information, how we analyze the data, how we make sure that we don't miss anything, and how we make sure that we report everything that we can to the client. So we try to be meticulous in how we report stuff. Negotiations and SPA, share purchase agreement. Yeah, so that's the Harvey Specter part of the deal. I mean, some people like the due diligence. Some people really like to dig into the papers, try and find out what the risks are, identify those, and report that. Some people, like me, like negotiations. So you have a lot about strategy in negotiations. Not all that you say is always what you mean, and not all, not all that you do is always to the point of what you want to achieve. So you have to work closely with your client. The smarter your client, the better your deal is most likely going to be. But it depends very much on the opponent as well. So there is a lot that you have to take into account. There are not maybe so many paragraphs or sections of the law that you can take into account when negotiating. Obviously, that's very important as well. And you have to have very good skills in local law, whether it's yourself, if you're in the country, or your local advisors who will help you. But you have to think about, you know, who that person is, what that company's like, what their history is, what's their language, what's their culture. Like the Chinese example, for example, I had no idea that, I as a lawyer would not even have to be or couldn't be in the negotiation room. So that was a surprise for me. I did not know that. So this is something that I could have used. Well, the client did not know either. So we were sort of stuck in a place for a while. So more often, deals are done across the border. This is why your seminar is about what it is. I mean, I don't know of any deal, not one deal that we have done within the last 3 years that is just Estonia specific. The buyers or the sellers have always been from different jurisdictions. The deal might happen in Estonia, but the ownership structures would be in different countries. So there would be an Estonian fund that we just advised, for example, which is Eften, who bought the Radisson Hotel for 46 million. It's quite a big deal in Estonia. It was sold by a German company, basically. So they owned it before. So that's already cross-border M&A. So you would have teams from Germany and from Estonia and from maybe another country who would then, be all part of this deal. And they would have to negotiate and work together and make sure that they make this deal happen. So everyone who goes into a deal wants to make sure that the deal happens. Lawyers are often blamed for screwing up the deal. So it's said that lawyers are deal breakers. I, as a lawyer, want to make sure that my clients understand that lawyers are deal makers. So I want to make deals because my clients want to make deals, so I want to make sure that my interests are in line with my clients. Now, if you talk about an SPA, a share purchase agreement, then there are various ways that this will be structured depending on the type of deal. If it's Estonia, most often an SPA would be governed by Estonian law, and the forum, I don't know if you're familiar with the term, but the forum means basically where you go to court, would also be Estonia. So most jurisdictions will allow you to choose which law governs the agreement. And this is important in terms of the structure and the measures that you can use against the other party when there's a breach. Okay, so when there's a deal in Estonia, it would usually be governed by Estonian law, and it would either be the forum, the litigation part would either be normal Estonian courts or the Estonian Chamber of Commerce arbitrage court. So that's another option. But this is not often the case. This is not always the case. So in countries where, for example, where foreign investors would go in and negotiate deals, and they would not be able to rely on the court system of that specific country. Let's take an example, the Ukraine, for example. The Ukraine courts are known to be quite corrupt. It's not, this is not my opinion, but this is something that is being published by Transparency International and other organizations. So we actually have a law firm in the Ukraine, and they're fantastic lawyers. But sometimes when they do bigger deals, the SPA would be governed by, let's say, UK law or Swedish law. And they would agree that whenever something happens, let's say there's a conflict after the deal, it's not exactly, what you bought is not exactly what you thought it was, or there's a breach afterward, or someone has violated your competition rights, then they would sue that other party based on UK law, not on Ukrainian law, because they're afraid that if it's Ukrainian law, then there's no real way of protecting their rights, because both the courts and the law itself is too either corrupt or primitive to make sure that that both parties have an equal sort of understanding. So this happens quite a lot. Estonia actually used to be like that 10, 15 years ago, where we were seen by international investors as a sort of a jungle, okay? But as that previous person said before, we've done a great job over the last 25 years, so we have a lot of economic freedom, we have a lot of stability, so laws in Estonia actually work, which is pretty good. But that's a technical sort of, part of SBA drafting and agreements. You would also see stuff like the SBA being governed by UK law, but the forum would be in the Stockholm Chamber of Commerce, for example. So then you would go to, in a case of conflict, you would go to Sweden, and you would, in that arbitrage court, you would then litigate based on UK law, which makes that very, very, very complicated. But sometimes it's necessary and not unheard of. Yeah, this is what I talked about. There's a mandatory law aspect which is quite important as well. A mandatory law aspect in these transactions, let's take again that same example about Ukraine and UK law. If you acquire shares, for example, in the share purchase agreement, you acquire a share or shares, then more often than not, the acquisition of shares would be, in continental Europe, would be governed by rights in rem, okay, so objects law, which means that you cannot agree on a different jurisdiction on this part of the agreement. So it's going to be a hell of a mix. Generally, the agreement and the rights and obligations are going to be governed by UK law. The rights in rem are going to be governed by Ukrainian law, because you can't agree between parties to, it's not a matter of agreement, so you can't agree on a different set of laws. And then you go to court in the Swedish arbitrage court and fight, in a mix of sort of laws. It's, again, a hell of a mess, but that's what sometimes happens. So whenever possible, you try and do deals just based on one jurisdiction because there's more clarity. But you can't always. So these are the things you're going to have to deal with if you're an M&A lawyer and you work across the borders with different colleagues from different countries. Competition provisions we talked about. The form is another issue depending on the country. So in Estonia, sometimes an SBA would have to be notarized, sometimes not. In Germany, sometimes it would have to be notarized, sometimes not. In Finland, you never, for example, notarize anything. It depends on the legal history of that country and the specific laws. So this is, again, something that you're going to have to think about. And yeah, warranties. I mean, my good colleagues tomorrow or the day after are going to talk about the SBA in further detail. So there's no point in going to super detail right now. But the main aspect of an SBA after the price negotiation and the deal structure is the representations and warranties. So basically, this is something that the seller is going to say about the asset. The asset is being the shares. So they're going to say that they're either okay or not okay or semi-okay or quasi-okay in a very sort of general glance. And then sometimes you would have, let's say, 40 or 50 pages of representations or warranties where they either talk about the shares or the company, what the state of the company is in, and this is what you agree, okay? And that's where the negotiations are. After you close, let's say you've gone through the whole process, you've negotiated the SPA, the competition board says you're okay to go, then you integrate. And integration takes, it sometimes takes more time than not, sometimes it doesn't, but integration is an integral part of the process. Employees, IT systems, know-how, bookkeeping, procedures, and whatever. So sometimes you just acquire a company, it's going to be there, you're just going to be a shareholder. Sometimes you need to integrate that into your own business. It's going to become one company. So within M&A, the mergers and acquisitions, okay, it's not always a merger. Sometimes it's just an acquisition. So it's very, it might be a little bit misleading, the entire term. For example, you can't really translate that into Estonian because it doesn't make much sense. And then usually you need to think about an exit. So you hear a lot about exits throughout the economic world and in the business realm. So if you already acquire the company, you usually, depending on who you are, what kind of a buyer you are, you might be thinking about an exit already. So a lot of funds, for example, would go in, would buy the asset, would grow the value, and then sell it. So the only point of buying it is selling it at a higher price. Yeah, purchase price adjustments is a measure that I'm not going to talk about actually, and solving disputes is, well, is again something that lawyers would very often do. So the fact that 80% of M&A fails doesn't mean that they always go to litigation or disputes. That's it. This is a very very short overview. I didn't actually really know how to sort of structure this because I've never talked about a very glancing M&A procedure. But I mean, please don't hesitate. If you have any questions, if you want to ask about something, I don't know if you even got a sort of picture about what M&A and what cross-border M&A is about. Whatever you want to ask me now or ask me later. You can email me or well, you can call. I'm not going to pick up. Sure. Yes.
In any part of M&A, do you also involve like professional salespeople or something like that?
Yes, but the salespeople would be investment bankers or corporate finance professionals. So basically, let's say that you have a company or a shareholder who wants to sell their company. They don't know how to do that. They would go to an investment advisor or investment bank or corporate finance advisor. Then they would put together a document called a teaser. This teaser would then entail the basic financial information and the reasons for someone to acquire the company. And then this would be followed up by something called an investment memorandum or info memo. And this would be a very long document specifying the financial details, the risks, blah, 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 all the information about this company or what's called the target or the asset. And then this is basically, that's the institutional, the professional sales part of it. So it's not sales, but it's sort of banking sort of sales.
So it's the very first part.
It's the very first part. So I mean, like I spoke about before, I mean, lawyers are at the very end, and later when the deal is done, the process is started by usually corporate finance specialists and bankers.
I'm just thinking about the negotiations part. That the negotiations usually for me involve like salespeople.
Yeah.
So lawyers have to be really good salespeople to also like take part in this negotiation part.
I agree, but sometimes the investment bankers would be. I mean, there are two sets of negotiations. There's one. The first part where usually the seller themselves and the investment bankers would have a pretty good idea of what they want to get for a target. The more professional they are, the better the understanding of both parties, the seller and the buyer, what the price is. So they would then initiate those negotiations, and sometimes the investment bankers would be present throughout the entire process. But the lawyer has to understand all the parts of it, basically, the tax, the finance, the law, and the very specific structure of the deal, the rights, how you protect your client, how you make sure that your client gets the most value. So more often than not, why lawyers are deal breakers is because they try to protect their client so bad that they screw up the deal because they go too technical and they try to protect your client to the very sort of last straw. So it has to be a balance, and you have to, there has to be a very good relationship between you and your client, but also the seller, to make sure that the information flows seamlessly. So for me, a merger is a company law merger, which is basically in Estonian company law, äriseadustik, we would have a very specific procedure where one company one entity, one limited company would merge into another. So this is a very specific process which is regulated by law, whereby two or more become one. Okay, and this is a technical procedure which is usually not between third parties. It's between related parties. So usually it's within a group. So let's say that there's the Estonian mobile operator EMT, who has a subsidiary which is called Deal, for example. So they would want there are two companies at one given time, and they want to put them together. So they carry out this procedure and merge those two companies into one entity. But within the process of mergers and acquisitions, M&A covers any type of acquisition or taking control of another not related entity. So this is not your shareholder, this is not your company, this is not your group. You go out there and you acquire either a real estate or an asset or shares or many companies at the same time. So that's murders and executions. That's a joke. But yeah, mergers and acquisitions. So a merger technically can happen after an acquisition, but it's always an acquisition. You always buy. You never merge. You can merge after, but you don't specifically have to. So I think the term is somewhat old. It's not really, it's not really correct.
Did I understand correctly that as a lawyer,
Probably.
yes, you can specialize, like being the negotiator?
Sure. I mean,
Like if you don't like the paper part, reading it, scanning through tons of detailed papers.
the problem is you might not like it. You have to know it. The more senior you become in your career, the more you can focus on one specific field. At least that's my feeling. You can't really learn M&A at school. When I went to work, actually during my studies, I think I was on the second year, I was given the opportunity to work in the M&A team of that law firm, and I had no idea. I was like, what the hell is this? I mean, what? I had no idea, absolutely. I mean, no idea. And then you start bit by bit, and then you look at, because in an M&A team, M&A involves lawyers from different teams. So law firms have these practice groups or teams, and then I was working in the company law or corporate team. And I would then, start learning my first, these mergers and divisions according to company law. I would do a lot of that advice. I would give a lot of that advice. And then you would sort of grow out of that. And when you have achieved a certain level of technical expertise in the actual law, precedents, statutory law, then you move on to whatever, negotiations, deal structuring, whatever. So, but most bigger law firms would probably offer you the opportunity to, at one stage, develop into, more of a negotiator, I guess. So, but it depends very much on the law firm and very much on the jurisdiction. So there is no specific rule.
What do you think is the most legally complicated when it comes to the transaction?
I think it's the there are two parts. The first part is the flow of information. So you have to, essentially it's mitigating risk. That's the generalization. Mitigating risk for your client. So in the first stage, it's making sure that the information that you give out as a seller is not misused, both during the transaction, after the transaction, or if the transaction does not happen. Because you give out essential business secrets, or you might important information and stuff that your competitors or other parties might misuse. So that's, as a lawyer, you do all you can to protect your client, not to do anything wrong, so to speak, okay, in that framework. And then the other part being that you negotiate, when you negotiate the terms of the deal, it's the negotiation is about Well, after the price part, it's about how you define the asset, how you define the target. And this is the representations and warranties part of it. So you have to be really, really smart in trying to define. I mean, the seller tries to basically not give any representations and warranties about the target. I mean, as a seller, I'd always like to advise my client to say, I mean, you know what you're buying. You've done your due diligence. I'm not going to say anything about it. If you haven't discovered the problems, it's not my fault. And if I'm the buyer, I want to say, okay, so I want to make sure you've given me all the information. If I have missed something, then it's not my fault, but it's yours that you didn't say it to me. You know, if I want to make sure that you say that everything is in perfect order, and if it's not, then I'll go to court. I'll get a contractual penalty. I'll get the damages, and I'll make sure you pay up. You know, when you have misrepresented your client. So that's the negotiation part, and that's the most difficult part. And as a lawyer, it's really tricky because you have to know all this stuff. You have to know the finance and the tax and the legal and the technical. You have to understand every part of the process, and you have to put that all into negotiations and then fight for your client in order to make all that work somehow. So it's super difficult, but that's what makes it interesting, I guess.
Does it happen often? I mean, the fact that lawyers get to be held responsible for ruining the merger, so to say?
I think these days, at least in Estonia, it happens less. I haven't seen it for a while because, well, I mean, the more and more professional you get in a country that's growing and that has more experience, then the lawyers and the advisors become more professional as well, so they would be in a better position and have better experience to advise their clients. Usually the lawyer's problem is lawyers are very risk averse, so your sort of internal reaction would be to say, okay, if I don't understand it, say no or kill it, rather than, you know, go ahead and say, whatever, do it, who cares, right? So that's, I mean, that's being a lawyer. That's what we do, and yeah, so that's the issue. Yeah. Shoot.
I think that's mainly the problem is that lawyers don't understand that there is a cost to everything. If you want perfect protection, then you have to pay for it a lot, and they don't understand that there is always a price for it.
Potentially, yeah. So you can, in M&A we call it, what's the expression? I can't remember right now. I'll tell you later. Anyways. Anything else? Okay, then we're done.